Thank you for everybody who was able to make it this evening. We're excited to have you here for this event. We're thankful for those that could join us in person, and we're also thankful for those that are able to join us online. My name is Opara Moore. I am the Learning and Development Manager for the 1AU University. And so I will be here to kick off the session today and offer opportunity to be around here if you have questions. What we're going to do is ask that for those that are in-house, if you have questions, please raise your hand, and Caroline in the blue blazer will come around with the microphone to allow you to speak so that those online can hear you. And then for those that are online, we ask that you will be placed on mute. So we do ask you to use the chat form to be able to submit your questions if you have any. So again, thank you for coming. And I'm going to introduce our first presenter, Keith. Oh, yes.
Good evening, everybody. How are we doing? Like Apar said, thank you so much. Thank you guys so much for coming out this evening, letting us share some knowledge with you. Hope you take away a lot of information from it. Again, my name is Keith. I'm the Director of Compliance for First Advantage. I've been here 7.5 years, around that time. So we're going to jump right into it. Maybe. There we go. Okay, so you're going to have, obviously, like I said, I'm your first speaker, but you're going to have speakers on all the topics you can see, and I believe you do have a printout in your folders as well. You can either track along on the screen or on your paper copies there. The money management. Boring, it's me again. So why do you want to make a plan? Money management, right? A plan is kind of a level set, right? It gives you something to work towards, and hopefully helps you avoid some of these things. So a survey conducted by Forbes recently, 28% of households have less than $1,000 in emergency savings. That includes personal savings, money markets, emergency funds, all that good stuff. So less than $1,000. So really no cushion for anything. 47% in another survey said money has a negative impact on their mental health. I'm sure most of us have probably been there before. Kind of coinciding with that, another firm, CreditWise, did a survey that 73% rank finances as their biggest stressor, right? It's a lot of burden on somebody. Kind of on the flip side, positive note on some of those, another survey, 83% people that set financial goals feel better about their finances after just 1 year. 1 year sounds like a long time, but we all know time flies. So you can really see a lot of movement within a year sticking to your plan. Anybody get scared with the word budget? It freaks everybody out. Sounds kind of boring, don't want to do it. We're gonna call it a financial budget, you know, diet restrictive, can't have this, can't have that, right? Kind of scary. Financial plan is kind of a better outlook on it. Some things you got to look at when or the first thing you have to look at when you're making that financial plan, what do I own, right? So what are my assets? And you can see this balance sheet on your screen there. All these questions get answered on your balance sheet. It's a good way to start. So writing everything down, showing your assets, your liabilities, and your equity with a picture of your goals too. So what are my goals? What do I hope to accomplish by setting this plan in place? More importantly, probably why. If it's because somebody said it's a good idea, but you don't have any investment in it or investment in a goal, you're probably not going to stick to it, much like a diet. You know, January 1, everybody hits the gym, everybody's working out, right around Valentine's Day, falls off, right? So we want to make sure that doesn't happen. So make sure your why is very impactful and very important to you. So what do you own, right? So all your assets, your cash, your retirement plans, even if you're car loans, right? You're paying on them with a goal of one day owning them, but you put those in your assets as well, okay? Jewelry, other, just a category for other things you may have that are considered assets, right? So what do I owe? List down all your liabilities, right? That includes mortgages, if you owe your sister money, if you owe your mom money, whatever. You want to make sure every liability is put down there. And once you get a picture of that, you kind of see where you fall. Do you have any equity in some things? Do you have room to move? And then figure out what your goals are. So what are some of the goals in here? All right, I want to pay off this car a little bit faster, right? So then you can start working towards that goal, but you're going to need a clearer picture of your balance sheet. And it's something you probably want to look at about once a year, maybe more. Make sure you're kind of dating it, keeping track of where you are on it. Coming back to look at it, you can see your progress you've made, right? So back to the other slide where a large percentage of folks after just 1 year feel better when they have that plan in place. They can see movement in that. Some of the whys, right? Pay off debts a little quicker, or maybe just get into a better position or set a better example for folks in your family. If you have younger kids and you're trying to build them up and get them on a better financial plan from the get-go so they don't fall into some bad habits later on in life, that could be another important why as far as running through a financial plan. Step 2, where's my money going? So get an understanding of what you're spending on a day-to-day basis, monthly, quarterly, yearly, that kind of thing. Pen and paper, write it down. We do have some copies for you. Might be in your folder. We'll have them on the way out. Just the easy way to just write down your balance sheet, pen and paper. Some folks rely on that and prefer that method, and that's totally fine. Excel, use a budget calculator. We can get these templates to you as well. So it's a little bit easier. Just kind of type it in. You can do all the fancy math actions there and get your totals and kind of get a better picture where you are. And then also mobile apps, a little plug for us, obviously, 1A. We have a great trends tab. So when you log in your online banking, click on that trends tab and it can help you see where you're spending your money. So it's a very useful tool when doing this exercise. Analyze your results, right? Not much just to write it down. You really want to take a peek at it. And when you're writing those things down, a month is usually good, but you want to go back as far as you're comfortable going back. You know, a quarter, a year, because you want to keep in mind all those monthly subscriptions or maybe things that pop through quarterly, annual gifts you're given, you know, creating your budget, Christmas gifts, birthday gifts, all that kind of stuff. Did you list everything, right? So again, harkening back to, hey, you may need to go back a little bit further to make sure you have those Netflix subscriptions, those annual service fees for whatever you may have signed up for in the past. So get a complete list of where your money is going. And you want to take a peek. Are you overspending? Are you spending more than you're making every month? Are you having to pull out of savings a little too often or short things here and there? You want to be able to flip that at some point. And what realistic changes you can make, right? So kind of like any diet, you don't want to force yourself to just kind of cut out everything and eat rice cakes all day, right? Not sustainable. We're gonna do a little exercise. So this is, we'll call them Pat and John, their financials, right? So you can see they've listed out kind of their budget summary here. And right now, as far as their income, their expenses are a little bit over their income, right? So we want to kind of take a peek through what we have up on the screens here and maybe try and identify some ways that we can help them kind of flip that shortage into an overage, or sorry, that overage, sorry, the under into an overage. So more money on hand a month so they can work towards those goals. So if you take a second, you do have slides on your paper if the screen's a little hard to see, but so we talk about income. Where can somebody possibly make, how can you make some changes in your income that would help you have more money on hand each month? Yes. Second job? Sure. Yeah, second job, part-time job, definitely a possibility. Sorry, I'll get you the mic. Sorry. Yeah, sit in front of
As far as your insurance or auto insurance, you can reshop to get a lower rate.
100%. Yeah, that's a good one. Yep. So income, part-time job, second job, something like that. Housing. How could you kind of adjust your housing? Keep in mind that could include your renter's insurance or your homeowner's insurance. So that goes to your point of shopping around, finding a lower rate. How else maybe could you kind of adjust your housing potentially? housing expenses. Refi maybe, depending on rates, will start coming down a little bit. Car payments. What can you do in the form of your car payments that maybe might help you adjust, get a little lower, more manageable payment there? Do you need? Yeah, refi. If you're, and we're talking about kind of hypothetical Pat and John here, do they need two cars, right? Maybe they can cut back on one. Maybe one works from home a little bit more and they don't necessarily need the car all the time. So maybe they have some movement there. They can, or maybe you can kind of go downgrade a little bit, get a little bit older car, save a little money, sell that older or the newer one. What about groceries? How can we kind of reshop to kind of lower that bill a little bit? Love it. Coupons, absolutely. What else? Don't need so much. Don't they put like the kind of the name brand stuff kind of at your eye level? Maybe just shop on the bottom shelf a little bit, right? The store brand products, things like that. We'll touch on credit cards, or another speaker will kind of touch on the credit card area later on this evening. So we'll kind of skip through that one a little bit. Anybody identify anything else? Gas, insurance, what can we do there? Weather's nice, maybe walk to work. I don't know, depends on how close you are, I guess. But carpool, love it. Yeah, absolutely. Call your coworkers, hey, scoop me up on your way in. I'll ride with you. Trade off, right? They carpool one week, you drive the next week. Save you a little bit. I think we touched on insurance, shop around, definitely. Me personally, I think anytime we get a renewal and it goes up $2, we're all right, we're shopping around. That's what we're doing. So we're always looking there. Probably the easiest thing that people identify in dining, they gotta stop eating out. Easier said than done, right? You get busy, you get home, kids are screaming at you, you don't feel like cooking dinner, so you end up ordering out, right? Trust me. I do it all the time. My kids are annoying. But maybe cut that back. Hey, once a month we'll eat out, right? Or get takeout from that restaurant instead of sitting there and maybe you don't order a couple drinks while you're sitting there. You get in the garage fridge and take them out of the garage and then enjoy them with your fancy meal at home. Utilities, kind of, do you need super duper Wi-Fi in your house, right? Probably just your kids playing on their tablets anyways. It's all right, we can cut that down a little bit. Maybe we lower the Wi-Fi. Entertainment, going out, doing things. Again, kind of goes in with dining, right? A little bit easier said than done to say I'm not going to go anywhere. What's that? Barely anything. Sorry, I'll speak a little bit more clearly for you. Get in entertainment. It's a little bit easier to say I'm just not going to go out to actually do it, putting that in practice, right? So same thing with dining. Maybe just lower your frequency on that. Your phone bill, same thing as insurance. Shop around a little bit. Is there another carrier that maybe can offer a cheaper rate? We're going to reorganize your plan. Savings. If you have that emergency fund built up, right, that at least $1,000 in a separate savings account somewhere, and you can adjust kind of what you're putting into it every month and maybe put, 25 extra dollars towards one of these other things and move that away from your savings for a temporary period of time, that can help you flip that number over there. Vehicle tax, not much you can do there, right? We got to pay them. Not, it costs you more if you don't. So definitely recommend paying those. They marked out monthly for gifts, right? So maybe reevaluate that a little bit. Maybe don't. My wife's a proponent of spoiling our kids. From that, so maybe I would probably drop that about $20 and let them do with what they already have. You got plenty of toys they can play with. Vehicle maintenance, you're kind of locked into that. If you can budget that out a little bit, you just never know what's going to go on with the car there. So let's see, how do we help them flip it a little bit? 3 changes, big difference. So in our example, Pat picked up some extra hours, a little bit extra income, bumped up the income to $5,000. As we said on dining, they cut back to once a month, right? So they're not splurging every week, every Friday. They're not going out. Maybe they pick a Friday and do that. Entertainment, they're getting rid of some of those Hulus and Netflixes and all that other junk people have, and just keeping one that pretty much meets all their needs, and they can sacrifice the other ones for a little while until they get in a little bit better shape. So they're keeping only that YouTube subscription. So there's a lot of small movements you can make that you add up all those small things, and it becomes a bigger solution to what you have going on. So you really want to stick to that financial plan, but if you don't put the reason behind it, you're more than likely not going to stick to it for very long. So you want to make sure that you create that balance sheet, put a date on it when you create it, so you go back and look and kind of track your progress for how long you've been running through your plan for. Ensure that you're writing down all of your liabilities. What do you owe, people, places, all of that good stuff. Keep track of your income and put achievable goals, right? Don't put, I want to be a millionaire in 6 months. Probably not going to have it. Not a realistic goal. And if you want to chop away it, so hey, I want to pay off this car in a year sooner than what my term is for, right? So you can start moving money around to different areas, cutting back on some things, putting some of that extra income strictly to extra car payments, and bump that down. But the key thing is setting your goals and level setting, right? Setting your expectations, making them clear to yourself, and checking in on yourself, hold yourself accountable. And that's what that balance sheet does. That's what those apps do that track your expenses. So you can see, all right, I stepped out of bounds this month. I went out 3 times instead of my 1 time I was talking about. So now I got to make some changes moving into the next month, try and get back on track. Any questions on some of those things we may have talked about, or any other questions regarding budgets and financial planning, things like that? Do you know if we have any questions online? No? All right, well, I think that is all of my part. So I appreciate you guys' time today. Thank you very much.
All right, good evening, everyone. My name is Kim Botley. I am the relationship manager here at the Denby branch and at the Fort Eustis branch. And today I'll be talking about how to get out of debt. Um, Anybody in the room debt free? Well, we're going to work our way there. We're going to get there. So um, that's what we're going to talk about today. So let's get started. That's me. Of course. Thank you. All right. So what's your priorities? What are the things that you look at when you're making an evaluation on how to get out of debt? So we're going to look at a few of those priorities, and then you're going to tell me which one is your priority. So what do you need to do? So one priority may be that you want to lower your payments just so that you can keep your payments low and stay current on everything. So that might be your priority. Some people may think paying the least amount of interest is the priority. A lot of people are shopping around for the lowest rate. So that's me. I want to know, who has the lowest rate when I'm getting a new car or a new credit card. So that's what I look for, is the lowest rate. How can I pay off my debts as quick as possible? That might be your number one priority. There are people who don't like to have debt for a long period of time, so they may have to have emergencies happen. Your air conditioning system goes out and you have to get a loan to pay that off, but you don't want to keep that loan for 60 months. So you want to look at how you can pay that loan off as quick as possible. So what are some of the things that you all look at when you're prioritizing your debt? What's your top priority? Anybody? Yes. The lowest interest. Yeah. Anybody else? Well, let's see what we can do to. All right. So how do we lower our monthly payments? What things do we consider when we want to lower our monthly payments? Does it make sense to refinance your home? What are some of the things that you look for when you're thinking about does it really make sense for me to refinance my home? Let's go back. Let's talk about it. So we just talked about some of the priorities. So we're rate shopping. What rate do you have now on your home? And what is the current rate that is out there now for refinancing your home? Is it even cost effective for you to refinance your home if your rate is not going to be lower? Those are some of the things that you would consider for that. Do I have to pay closing costs? If I have to pay closing costs, how long is it going to take me to recoup that closing cost? If it's going to take me longer than what I'm saving on the monthly payment to recoup the closing costs, is it even beneficial for me to do it? How long are you going to stay in your home? That might be another option. If you're only going to be in that home short time, say you're military and you buy a home here in the area, but you're going to PCS somewhere in 4 years, is it worth you to look at refinancing your home? Or if it's a home that you bought as a starter and you find your dream home somewhere, how long do you want to stay in that house? Is that the beneficial thing that will make the decision for you on whether you can refinance that home or not? So those are some of the things that we look at when we think about, does it make sense for us to refinance our home? Does it make sense for us to refinance our auto loan? I'm looking for the rate. The days of 1.99, 0% interest are gone. So does it make sense for me now if I have a 3.99 rate, but I have a $600 payment? Is it going to make a difference for me to refinance that loan to a 6.99 rate and have about the same payment? It doesn't. Is it beneficial for you? How much are you saving in the long run on a couple things? Is the payment lower? The interest, when you look at the interest over the life of the loan, how much in interest are you paying on that loan? Is that going to make a difference if you refinance? If I have 6.99 and I can find a 3.99 rate, I'm going to save on that interest. And over the life of the loan, that's a big savings for some. So that's a major consideration when you're looking at whether it makes sense to refinance your loan. Do I just need a lower payment? Sometimes it's easier just to call your financial institution if there's been changes in your credit since you refinanced or since you financed your loan. If the rates have changed, call your institution and say, hey, I just want to look at maybe my credit has changed. I had a 640 beacon when I bought my car. I'm now at 750. Could I get a lower rate for that vehicle now? And they may be able to do some adjustments for you that would put you in a better position. Your rate may go down, which means you're going to save on the interest. They may not change your payment, but if you have a higher payment, lower interest, you're paying that loan off quicker. So the quicker you pay it off, the less in interest you're going to pay because the interest is daily. So you pay it off, the principal balance quicker, you pay less in interest. Should I consider a home equity line of credit? Does everybody know what a home equity line of credit is? Home equity line of credit is a line of credit that uses the equity in your home. So you buy your home at 300,000, but you now have paid it down to 100,000. So you have about 200,000 in equity in your home. So do you use that equity to pay off some of your bills that you may have? Is that beneficial for you to do that? The good thing about a home equity line of credit is that it's a variable rate loan and it's based on the Fed rate. So if the Fed rate is low, your interest rate is low. If the Fed rate is high, it's going to increase, but you have that ability to then, as the Fed rate decreases, it will decrease as the Fed rate does. So that's the good thing about the home equity line of credit. Let's look at the next one. Should I get a credit card advance to pay off other credit cards? Is there a promotion going on? We just had one. So you could transfer balances on your credit card. So is it better for you to take a promotion of 3.99 and pay off a credit card that has a 29% interest? Because we all know most credit cards nowadays are very expensive in the rate world. So would it be beneficial for you to transfer that balance to a lower rate credit card? That's something that you would want to consider when you're looking at these. Has anybody recently transferred a credit card? Does anybody here have a credit card with First Advantage? All right. If you look at First Advantage credit cards and look at some of the other institutions, we have some of the lowest rates on our credit cards that you can find. So if you do have one that is a higher interest rate, I had one that was 17.95%. To me, that's high. You could transfer it to a lower rate. We have rates as low as 10% here. So that would be a beneficial savings for me to transfer that balance. There are fees sometimes there are not. It just depends on the promotion. That's a great thing to consider. Is there a fee for me to transfer that balance? And is that fee cost effective for me to transfer the balance? If the fee is only $25 and you're going to save $150 in interest, then yes, I would say yes. If that fee is astronomical, and most of them are not when you're transferring on a credit card, they're not. So it probably is, if you're going to save in the interest, that would be the best thing for you to do. And as we said, maybe is the answer for all of these. One may be better for some person than the other is for another, because this is not a one size fit all plan. Everybody's debt is different. You may have a lot of credit cards. So the better thing for you to do is to look at a home equity line. One, you also get a tax deduction for those home equity lines. So if you can put your credit cards into your home equity line, that may be another tax deduction for you. So you have a lot of things that you can consider, and that may be beneficial to your needs for getting out of debt. All right, so now we're going to talk about the methods of getting out of debt. And the first one we're going to talk about is the avalanche method. So the avalanche method says you pay your highest interest rate first. And then when you pay that, you put all your extra cash on that highest interest rate. Once you do that and you've paid that debt off, then you take that money and you apply it to the next highest rate. And that's called the avalanche method. Any questions? So the pros of the avalanche: you'll pay the least amount of interest while eliminating your debt, because you're going to pay the highest first. And so while you're paying the highest, you're paying those off. So you only have the lower rate interest debt still hanging around. So you're saving as you're paying. The cons: it may take some time. Normally when you have higher rate debt, the payments are higher. So it may take you some time to pay those off, because you're paying them. We always say pay a little bit more than your minimum, because that's going to chip away at your principal balance. So if you can pay a little bit more with your extra money with the financial plan that Keith talked about, if you can shave away some money and have extra money and you want to put all of that on there, pay a little extra on your higher rates, more than your minimum payment, and that'll chip away at your balances. The snowball method. What do you think the snowball method is? Correct. Exactly. So the snowball method, think of building a snowman. You start with a little ball, you make a little ball, and to make the body of the snowman, you're going to roll that ball until it's large enough for that body. So what you're going to do is you're going to chip away at your debt by starting with the smallest debt. And you're going to pay that debt off. As you're paying the debts down, then you're going to add that money to the next smallest. And you get the smallest out first. And as you're going, then you have the largest left to pay. The pros to that, you stay motivated because you're paying off the smaller ones. So not thinking about it, you're paying off more. So it's keeping you motivated. You're saying, okay, I'm getting this done. So it's not going to take as long as the avalanche because you're starting with the highest interest rates, which probably is your highest bill. So you're going to stay motivated and keep paying at those bills until you get to your goal, your destination. The cons, you may pay a little bit more in interest because remember you're paying the smallest debt, but that might not be the highest interest rate. So you're going to pay the smallest debt, and then overall the avalanche method, is still there. You still have your highest interest rates there. All right. So remember, progress is key. So it doesn't matter which method you choose. If you choose the higher interest rate, then choose that, but stick with it because the more you pay off, the better your financial plan will be. So progress is key. So it may seem like it's taking you forever, but you'll get there. You just have to keep chipping away. I say chipping away because you're going to chip away your debt. Keep chipping away at that debt and don't get discouraged. We all have it. I would love to be debt free, but unfortunately, I got a 30-year mortgage. So we just have to keep chipping. And then celebrate your wins. If you pay off a few bills, you can reward yourself. It doesn't say, we don't say you can't, spend money at all. You can reward yourself. I've paid off these bills. So I might, treat myself to dinner one night. It doesn't mean you have to be in the house and be a hermit. You can reward yourself for paying off your bills, as long as you keep your goal in perspective. So, any questions? Any comments? Anybody already started this and have some success stories of how it's worked for you? Okay, and how did that work for you? Yeah.
Oh, I don't need a microphone.
They can't hear you online.
Oh, that's normally what I would use. I like just paying off the smallest one first. It
Right,
gives me incentive to pay off the larger one.
right.
But you're getting the small one out the way so that, it does make you feel good to
Yes.
knock out one or two.
To have
Smaller.
something paid off.
Mm-hmm.
Yeah,
Yep.
yeah. Anybody else?
They can't hear you. Okay. I would say with the snowball effect, it's easier for me anyway because the benefit to that is when it's on your credit, it'll apply a lot quicker as, paid off accounts and things of that nature. So
And we have the credit guru here, so she's going to tell you a little bit more about the credit part of that. So So we'll talk more about that, but that is true. You know, as you're paying these bills down, that's increasing your credit score because that opens up your availability of usable credit. So you're right, absolutely right. Anybody else? Yes, ma'am.
So I also use the snowball method. I learned about it with oh, I can't think of his name now.
Is it somebody here?
No,
Oh,
Dave Ramsey.
okay.
Dave Ramsey talked about it. And so as I was using that, I noticed that each month I had a surplus of money. So what I did was instead of making the one monthly payment, I made two monthly payments, and that got it down quicker. So I've actually paid off my six-figure student loan, and then I had about $30,000 in credit card debt. And so I rewarded myself by purchasing a house. So
Absolutely.
now I have more debt. But it's considered good debt.
And make yourself a debt too. Don't forget, you got to make yourself a debt and put some in savings too. So, you know, pay yourself while you're paying your other bills. Make sure you put a little in savings. So, for those rainy days and emergencies that come up. So, you know, put what you can towards those bills. Like she said, she doubled up on her payments, but don't forget to put it in savings as well for those emergency times. All right. Any questions online? Okay. Well, it was good to see you all. Thank you. If you need anything, come out and visit us.
Good evening, everyone. Thank you for coming out to the Financial Empowerment Seminar. Tonight, we are going to discuss how to effectively understand overdraft protection. My name is Rebecca Corbett. I am one of the Learning and Development Specialists here in the 1A University. I have been with the credit union for almost 3 years now. In October will be my third year. And this was my first financial institution that I've worked at, and this has been the best career choice for me moving over to a financial institution. So overdraft protection, what is it and why do we need it? Overdraft protection is when there aren't enough available funds in your account to cover your transaction, but we pay it anyways. Your available balance is different from your current balance. Your available balance is what is actual available to you, while your current balance could have deposits that are on hold or debit card transactions that have been approved but not yet settled yet. You can view your balances, both balances online or on our mobile tab anytime. We all have those uh-oh moments. Stuff happens in life. We might forget that, oh, I set up my auto insurance to come out on this certain day. And then let's say your rent comes out on the next day. So we all have those uh-oh moments. We got you covered if you ever do. Sometimes you do need a little bit cash to cover those essentials, those day-to-day essentials that we all need in life. So we do offer several different types of overdraft services here at First Advantage. The first one is our overdraft protection, which are your draw accounts. The next one we have is our standard overdraft service, enhanced overdraft service, which is our Reg E. And we do have a new addition, our Cash Please loan. So let's go ahead and dive into these services. Overdraft protection. You can link a secondary account to your checking, such as a money market if you have one, a savings account. What happens is when you do set up those draw accounts, your funds will automatically transfer from the draw account to cover those funds, to cover the checks, reoccurring debits. Those reoccurring debits are those debit card transactions that you promise to pay online each month. And also, we cover the ACH payments. Your ACH payments are the automatic payments that you have set up as well. You can also apply for our overdraft line of credit. With this overdraft line of credit, interest will be charged on any outstanding balance. A credit, it is based on your credit score. Once approved, we can set up that draw account for you for that protection for your checking account. And it's fee-free transfers. You can use our enhanced or overdraft protection service that we have. Standard overdraft fees will apply, but no credit check is needed for this service. And then you can apply for our newest Cash Please loan. Cash Please loans are a short-term loan that we offer. No credit check is needed. You do apply for this loan online only. Application fee does apply. And this helps when we need those certain advances. Sometimes we might forget we're running short on funds. So before those expenses come out, you can apply online for that Cash Please loan. And within 24 hours, you will get a decision and that money transferred into your account. And again, no credit check is pulled for that. So our standard overdraft service. So we always strive to pay checks, those automatic payments, which are your ACH payments, reoccurring debit card transactions, such as your TV subscriptions. I know we all have Netflix probably. So those subscriptions that come out each month. Also those gym memberships, Planet Fitness, One Life, those all come out reoccurring each month. And then also your bill pay payments. Does anybody use our bill pay here at First Advantage? How do you like that service? Okay, good. So you do get bill pay if you do sign up. Let's say you have an Advantage free checking account or preferred checking, you can get that service for free as easily as just signing up for e-statements. If you do have our Premier account, that is actually one of the benefits of having that. It automatically comes with that particular account. So when you do set up bill pay, you can set up to 49 payees at one time, put in your schedules when everything is due, and this sends out electronic checks to these merchants. You can also, you do get a customized limit or assigned for each checking account based on the history, your direct deposit, and your activity. So how long have you been a member? That plays into a part into that. Do you have direct deposit coming into First Advantage? And how often are you using your First Advantage account? So for an example, if you are, because it is customized limits, it is reviewed daily. So let's say for an example, you have been using your overdraft. There is a limit to how much you can take your account into the negative. If you are at your max limit, it could possibly deny the other reoccurring charge that could come out. So again, there are customized, it is subject to change each day. Go back once. And just remember, you could opt out of this service if you prefer. So next up, we are going to talk about our enhanced overdraft service, which is our Reg E. And I know everyone's probably like, what is Reg E? And I'll get to that. So enhanced includes all items from the standard service, but also includes those one-time debit card transactions. This means if you're at the grocery store, you know we need those much needed groceries, right? So we're at a grocery store and you realize you do not have enough funds to cover a transaction. If you opt in for Reg E, that means you allow First Advantage to approve that one-time debit card transaction, and you can get those groceries that you need because we all need to eat. Again, customized limits are assigned for each checking account based on the history, direct deposit, and activity. It is not always a guarantee that overdrafts will be paid, will be authorized and paid. You can opt out or opt in anytime by simply visiting a branch, calling in. You can use our website. It's very easy to use, the www.firstadvantage.org, or you can mail in the form. But in order to opt in or out, we do have to get a form signed for you. All right, so continue with overdraft services, the enhanced overdraft service. So opting in, we will strive to pay checks, ACH transactions, reoccurring debit card transactions, everyday debit card transactions. If you do choose to opt out, we will still strive to pay checks, your ACH transactions, and those reoccurring transactions, but we will not pay those everyday debit transactions that we if you swipe your card. So if you decline opting in or opting out of this service, it is blocking your payment will be declined, and it's going so that your account no overdraft will be paid, so you would not go into the negative. Does anybody have any questions so far about overdraft? Okay. Next, yes, ma'am. The cash please loan?
Yes.
Yes, ma'am.
Is the interest rate on that?
The interest rate on that, so it is 27.95% standard, but you could set up Easy Pay to get that payment automatically taken out for you. And if you do set up that way, the interest rate changes to 24.95%. That loan is anywhere between 1 to 5 months, and being that it is a cash please loan, you can only have 3 of those loans in a 6-period cycle. And it ranges from $200 to $750. But it's our newest product, but it's been a great turnout. I feel like, instead of taking your account, there's nothing wrong taking your account in the negative, but just having those extra funds when you need it is a lifesaver sometimes.
Just the interest on these services, and there's not a fee
For which service? The cash please?
for the
The overdraft?
the type.
So there's no interest for it, but if you do take your account into the negative, it will be a $29 overdraft fee. Yes, ma'am. Yes, ma'am. All right. So next steps. Of course, you want to link your checking accounts to either a line of credit, a savings account, or money market account. This acts like a line of defense for your checking account. I always say it protects that checking account. So in the event you don't have enough funds in your checking, you swipe your card or you make an online payment, then it will automatically pull from whatever line of defense that you have. And you can have more than one. Maybe you want to set up your savings account first, and then your money market, and then your line of credit, and you can choose the order in which you want it to be pulled from. Also, again, you have the option of getting a cash please loan before you run out of money to pay those expenses. Again, you can apply for that online. It is much less expensive to pay one cash please loan application fee, which is $20, versus paying 3 or 4 overdraft fees. Because those $29 fees, they do add up. So if you are like me and you like to pre-budget your money, this would be the cash please loan would be the best option, the cheaper option. For cash please, direct deposit, account activity, and the history. You do actually have to be a member for 90 days in order to qualify for that loan, and you have to have an eligible checking account, which means you can't be a joint on the checking account. You would have to be the primary owner. account activity, and account history. And then last but not least, you could turn on text messages, whether you use online banking or the mobile app. Both of those options will give you available alerts that you can set up. So you can set up when maybe you want to alert when your balance falls below a certain dollar amount, when your withdrawals are made, when any withdrawals are made from that account, or even if you make deposits to the account, you want to know what your balance is and you want to get those alerts. It's real easy to get that set up. But that is all I have for the overdraft services. Does anybody else have any questions about overdrafting?
At what point, would you, decline, overdraft?
Overdraft,
Mhm.
being that it's customized limits for each checking account, if you are close to that customized limit, it is a possibility that a charge would get declined. Yes, ma'am. Well, I truly appreciate everybody taking their time out and coming in to see us tonight. Thank you so much for your time. Thank you. Next.
Okay, can you hear me? Okay. I have a teenage son, so I could yell if you want me to. You just let me know. All right, I am Erica, and I am a commercial loan officer here at First Advantage. I've been here for 7 years, and before I came here, I was an Equifax sales agent for about 20 years. So my job was to serve all of the local banks and credit unions and impart some of our credit knowledge onto their shoulders. And obviously, I joined the First Advantage team a few years ago. So I'm going to talk to you a little bit about what is going into your credit score, where it comes from, the information that is being used, and then kind of a little information about that and why it's so important. Because it's really hard sometimes to understand when you go into some place and you apply for a car loan because you need a car, and they say, well, we can't do it at this time because you either don't have credit or your score is too low or you have to pay more. And unfortunately, that's a very real fact of life right now, is that credit is used in all of those aspects. It's beyond just getting a car loan or a credit card or a mortgage or something like that. It's also going into a lot of employers look at your credit report now, and they're looking to see if you owe money to people. And maybe if you would be a risky person. They're also looking to see if there's a likelihood that you're going to pay your bills or not pay your bills. They're also going to be looking at it to give you car insurance or homeowners insurance. And they may approve those things, but during the process of being approved, you may end up paying a lot more. So this example that's in here right now is looking at the difference between a 720 credit score and a 620 credit score. So this is kind of using the Equifax model of credit scoring, but all of the credit bureaus use their own model that FICO developed for them. So Equifax, Experian, and TransUnion each have their own model, and it's very similar, but not the same. Because it would kind of be like Burger King and McDonald's sitting down together and sharing their special sauce recipes with one another. Nobody wants to do that. We want our own special sauce, and that's all we're going to do. So if you're looking at this particular example, you see that 720 on an as $25,000 car loan, your interest rate today would be something like 7.15 at 72 months. So that monthly payment would be $428 a month. And so over the life of the loan, you're going to pay $5,800 in interest. However, if you had a 620 credit score and you were buying the same car, you would pay almost 18% at 72 months. And this is kind of an industry standard interest rate that I use to calculate it. That makes your monthly payment almost $600, which is $150 more. But look at how much interest I'm going to pay in the life of that loan. So, you know, if you have to have a car, obviously you're going to do what you have to do to be able to get it so that you can go to work and eat. But this is the importance of kind of maintaining our credit scores so that we know that we're going to be able to take care of the things that we need to take care of without having to pay more than we should have to pay. All righty. So the things that you're going to find on a credit report is going to be all of your identifying information. We've got your name, address, social, date of birth, even your employer and your telephone number. Now, the employer and telephone number, they're not required when ordering a credit report. And so, to be honest with you, sometimes we put it in, sometimes we're just too lazy and we just want the credit report so we can get your loan done and get on with it. So sometimes that information is not completely accurate. The other things that are going to be on there is any type of loans that you have with companies that report to the credit bureau. So I'd like to pause by saying this sometimes because it's important to know that it's not required to report things to the credit bureau. So if you were to go to a certain company and they didn't feel like going through the hassle of reporting, because it's a cost to that company to report your data. You have to report it, then you have to manage it every month, and then you have to handle the inquiries or the disputes as they come in. So they might not want to do that. So it's important to make sure that that question is asked and answered if you're getting a loan with a company that's maybe not a credit union or bank or something like that. And then we're going to have information about your credit score. So like I said, we use the Beacon score, which is the FICO score, but there's lots of other credit scores out there. So if you pull a credit report off of Credit Karma, right? That's not a Beacon score. That's their proprietary credit score. So it's not going to be the same as what we're looking at. And that can be really confusing and quite honestly, a little bit stressful, right? Because you think that you're doing something good, and then you walk into the credit bureau, you know, whoever's giving you the loan, and you sit down and they say, but no, your credit score isn't what you thought it was. So it's just really important to make sure they're always kind of comparing apples to apples. And if you have questions about that, your credit union branch is probably the best place to start with that, asking those questions. And then we're going to report, or your credit bureau report is going to contain bankruptcy, judgments, excuse me, unpaid child support, late payments, charge-offs, and collections. Now, there's limits to how long all of that derogatory information can actually stay on your credit report, but things like unpaid tax debt can stay on indefinitely. So there's certain things that the government is not going to let come off. And all of that is regulated by an outside agency that tells the credit bureaus what they can report and what they can't report, and how to protect the consumers as well as the creditors. You're also going to see any inquiries, which is anybody else who's looked at your credit report, and also fraud related data. So if somebody has gotten a hold of your credit information, they've pulled something out of your trash and they've tried to apply for a credit card, you're going to see that information on there. And that's why it's really important to take a look at it every year and make sure there's no random credit report or credit lines on there that you should be paying or anything like that, especially in today's fragile environment where there's lots of fraud going on. All right, let's see. I'm not very good at this clicker thing. So, what is not on your credit report? Anything having to do with checking or savings account. your gender, your ethnicity, religion, political affiliation, medical history, criminal records, motor vehicle records, actual items purchased on your credit report, the types of vehicle you purchased, and any public records that are greater than 7, 10, or 11 years old. Let's just assume 11, but there's collections fall off at 7 years. This is really important to us all, I think, because when you are having somebody pull your credit report, unless they're looking at you, they don't know who you are or what you look like, right? And so that's really important for all of us to know. Let's see, next. Okay. Remember I told you about that FICO score and what goes into it? So this is the secret sauce, and this is Equifax's version. In this part of the country, Equifax is the primary credit report. So it's a good one to kind of rely on for most things. What goes into it is our payment history. 35% of our credit score is made up of our payment history. So this means how often am I paying things late? How late did I let it get? And when was the last time I was late? So that's a big factor. So if you have a late payment and it's just a one-time thing, I mean, I work here and I worked there and I still every once in a while forget bills. And I'm like, oh, I forgot to pay that bill. Unless it's 30 days or greater, it's not going to impact you. And if it's a one-time 30-day late in a year, that's understandable. And so Kim spoke about it earlier. The best thing to do if you're in a situation where you lose your job, you get sick, you're out of work for a certain period of time, something happens, and you know you're not going to be able to pay your car loan on time, your credit card on time, your mortgage on time. You go to your financial institution and you sit down with them and you say, I was out of work for 6 weeks. Help me figure out what we can do. And let's put a plan together. Being ahead of that game rather than later is a much better plan. So it would be if you go in 6 weeks after the late payment and you say, okay, I was out of work, should have come in, but I was busy or whatever, we can't go and remove it for any reason unless it was completely inaccurate. So it's better to do that prematurely. The second thing is going to be the amount of debt that you have in comparison to what you could have. And so what I mean by this is if you have a $10,000 credit card limit and you owe $10,000, you're at capacity, you're maxed out, right? But if you have 3 $10,000 credit cards and you owe 10, you're not maxed out. So it's a little bit better. So I'm not saying go get a bunch of credit cards, just saying try to like watch that portion of that and remember that. So this really applies to everything. So when you just buy a house or you just buy a car, you're kind of at that you're at that top level of what you owe. But as you start paying things down a little bit, you're getting a little bit of cushion in there and it's making that credit score go up. So the other thing is credit history length. So this is how long have you had a credit report? How savvy are you with credit? Did anybody else get a JCPenney or a Sears credit card when you graduated high school? Me, yeah, same. Because they're like, oh, it's $20 a month. So you're like, yay, toasters for everybody. And then you're like, well, now I have 5. That means it's $100, you know, because then I don't do anything small. So I had a Sears and a JCPenney and I had no job. So I don't know why they gave it to me, but I had those credit cards. So my point in that is that I want to try to leave those open so that I can have a history, right? That shows I know how to pay off. I know that every month I'm going to get a bill in the mail and that I have to make a payment. And I know that I'm responsible for making the minimum payment on these loans. So the longer they have that, right? It's completely common now to see somebody who comes out of college and all they have is a student loan or like 6 student loans. And that's the only thing they've ever had. That's not really credit, right? Because what are the chances that mom and dad are paying those? Or have they paid those? Have they been in deferral the whole time? So that's kind of the difference and where it would play into that credit history. And then, of course, obtaining new credit and the types of credit used. So obtaining new credit is, am I going to every store around and getting every single credit card? That could potentially impact my score. Not as much when it's like you're at Lane Bryant and they say, do you want 10% off? Yes, I do. I sure do. You go to, I don't know, Walmart. Do you want 10% off? Yes, I do. I sure do. I'm going to apply for those if you're going to give me 10% off. I'm then going to shut it when I'm done so I can get 10% off next month when I go. But the difference with that would be if it is an inquiry from Lane Bryant, I'm trying to think of credit cards, Capital One, some things like that, that's going to weight differently than if it's an inquiry for First Advantage or Bank of America or Checkered Flag. Why? Because at First Advantage, Checkered Flag, and Bank of America, I could get more than a credit card. And I could get a credit card not for $1,000 that they give you at Lane Bryant. I could get a credit card for $10,000 maybe. Or I could be buying a $5,000 car or a $50,000 car. So those inquiries are going to weigh out much differently from one another because we want to protect the next creditor in line who's going to see it and go, well, what did you buy at First Advantage? Did you already buy a car today? Or can we wait and see what happens with that? And then the types of credit used. So like I said before, if all that person has is student loans, it's not a really good mix. They don't have a lot of experience. So we like to see a good mix, a credit card, maybe a house, maybe a vehicle, something like that. So you can show that there's a good mix of credit. All right. I'm almost done, I promise. So to maintain good credit, you want to look at your credit report at least once a year. But, and I know it's on the next slide, oh wait, because it's gonna be exciting. You're gonna like this part, I promise. So maintaining good credit, make sure you look at your credit report often, especially in today's day and age. People can take your information from a lot of other sources. Okay, they could go through your trash, they could take something out of your mailbox, and I'm not trying to scare you, I just want you to be proactive. Data breaches, there's a lot of stuff going on and you never know. So if you're looking at it and you see something like there's a new credit inquiry and you're like, I have not done that, I did not go there, then you can take care of it before it gets far enough down that road that it's a real hassle. The other thing is to dispute anything that's not correct. Maybe the bank or credit union made a mistake and they said you were 30 days late, but you don't recall that happening. So you can find out if they can prove that you were and take care of that. Maybe it's just a mistake, or maybe you forgot and your bill pay is set up wrong, or is there something like that? This way, you don't get into something that's like a snowball effect. They get 1 card, 2 cards, 3, and then you're trying to pick up the pieces and get it all taken care of. So I always like to urge people, please maintain credit of some kind throughout your lives. I know I won't ever be in this situation, but I have had people who were older who came in and they now needed a new vehicle, but they paid off their cars, they paid off their mortgage, and they don't have credit cards. And now they don't have credit. And it doesn't matter if you paid it all off or if you have $200,000 in the bank, none of that matters. I have to use a credit score. And so it's important to try to keep some kind of score going. I'm like Kim, unfortunately, I'll die with a mortgage. So that's not always an issue. There's no such thing as credit repair, not legally and not the way you want to do it. So please, if you get into a position, it's much better to talk to somebody who, like, go to your credit union, go to your bank and sit down and say, look at my credit report, help me, let's build a path to get myself out of this mess. Going to somebody that's the credit repair clinics, they're likely going to be using other people's data and unlawful methods to do so. So don't get caught in that circle. Always be careful co-signing for people. Always. Before you do that, make sure you think about the consequences. Payday loans, be very wary of those, and car title loans. And everybody here today has already shared some really great solutions, so you should never have to do that. And that's why the credit union continues to offer these kind of products that they talked about today, so that you're not in that position. Know before you go. If you want to buy a vehicle, you want to buy a house, go into your credit union, sit down with Kim and talk to her about getting pre-approved, so that when you go to that car dealership, you don't have to sit there and play the game with them going back and forth, and then you're buying the mats and then they're spraying the bottom, and before you know it, you bought all this stuff that you didn't really want to buy and really can't afford. So just get pre-approved, pre-qualified, and that way you walk in there like you own the place. If you have trouble paying a loan, obviously reach out to your lender before you get to that place. And then finally, this was the exciting part. We offer a monitor your credit score. If you are on mobile banking or online banking, you can have access to Savvy Money, and there's no cost to you to do this. And it pops up and it tells you there's been an inquiry. And if you put your email in, it tells you if your credit score has changed or something's going on. And every time you log in there, you get to see your credit score and you get to see how it's changed and what's changed in it. And this mirrors what we're going to see. So this is an awesome benefit. If you're not registered for online banking at this time, go to your branch and talk to them and they will get you all signed up. Or somebody will probably do that before you leave tonight. Are there any questions? No, that does not count. It doesn't. Nope. It doesn't affect your score at all. Yep. And nobody even sees it. This is your portal. Nobody sees it. We don't look at this, okay? Yeah.
It got my attention about I know a friend of mine, she filed bankruptcy.
Yep.
She did I'm gonna have to tell her, you said something that got my attention, that you owe taxes for the government.
Mm-hmm.
You file taxes. That can be on your credit score?
The unpaid tax liens, yes. Now, bankruptcy, no, that is filed, but it comes off your credit file after the 7 and 11 years.
What's a tax lien?
A tax lien is like if you forgot to pay your federal taxes at the end of the year and they came to you and they said you owe us this money and you continue to not pay, they have the ability to place a lien on your credit file that says you owe the government. Now, in a lot of cases, it takes a lot to get to that point. You're never going to know or not know that that's where you are. Yeah. Huh? Yeah. Okay. Mm-hmm.
Taxes.
No. It really is only going to be applicable when you get to, you're going to, You're going to file your taxes at the end of the year. If you don't pay them or you can't pay them and you set up a payment plan, that is not what I'm talking about. You can, yes.
Sorry.
Yeah. And you're going to be working with somebody, now that you're a business owner, you're going to be working with somebody who's going to help you with filing your business taxes, and they're going to walk you through all of that. So that's their job, is to take care of you and to make sure that you're filing your taxes correctly. Okay? Yeah, sure. Anybody else?
Credit score down.
Not really, no.
When you pay off certain things, when you pay it off,
Uh-huh.
that will bring your score down because they want you to continue to pay monthly instead of, paying off. That it cuts their history down.
It depends. So when you pay it off, it will remain on your credit file for another couple of years so that you can get the benefit of that. You're not going to be, nothing really changes as far as that, unless it's like your only thing on there and you never have anything again. Remember, it's a balancing act. So all of those trade lines are all going to be flowing in together. So no, paying something off is not ever going to reflect negative on you unless there's multiple other factors with that particular trade line. Yeah, they do. People will tell you don't close a card. But I always like to preface that statement with saying, if you need to close that card so that you don't use it to help you get into a better financial place, you close that card. Okay, that's what's important. You don't need 9 cards. You just need to not go close everything in one day. But just remember that this system is not as sensitive as we think it is. When I was working with Equifax, this was a while ago, I did a home renovation and I had to go get the stuff for the contractor, like at Lowe's and Home Depot. And I went to both stores in one day and applied for credit cards in both stores. And I got them and I used them and then I paid them because I had the money. I wanted to kind of see. My credit score fluctuated very, very little. Very little. I think 2 points going up and down in that 60-day period of time. So this system is not built to punish you or to make it difficult. A lot of these things are very extreme things, like, you don't want to go one day and close all your credit cards. Just take your time and do it slowly. But certainly don't use that advice if having that credit card open is going to be detrimental to you. Those are wonderful for building credit, and they just help you to build your credit history. And it protects you because that money is secured by something, so you can't get in over your head, and it protects the financial institution for that period of time.
The payday loans and stuff that you was talking about, you had mentioned those. They are very predatory.
They're very predatory, yes. That's why you always want to try the products that Rebecca shared today were specifically designed to help you so that you don't have to do those payday loans. I sat with a member a few years ago who had a payday loan that was 364% interest capped. So, I mean, you can really get into financial, trouble. So that's why you need to go to your credit union.
So on Saturday, that Saturday money score, where does that come from?
That,
Because I have that too. But that score, where's that score coming from? The actual score.
TransUnion.
Okay, so is that the score y'all use?
It's very, very similar. Yes, it's
Okay.
almost mirror image. Yeah,
Okay, that's good.
yeah. It's a very big benefit.
That's good too.
You would have to pay a lot for it if you wanted to go directly through TransUnion or Experian. So, yeah.
But it's free.
It's free. Yep. Yes, ma'am. Well, thank you so much. I have enjoyed rambling on tonight.
So I just want to thank you all for coming tonight. We really appreciate the participation and you guys coming to our event. Please remember that if you have any questions, you can call any of us here at First Advantage. We will be happy to assist you with any of your questions. This branch is the Denby branch, so this is where we are currently housed. We would love to have you out at any other event. We do have a survey that we would like for you guys to participate in so that we can know what other types of courses that you would like to have. So we're offering a QR code if you have a phone that you want to scan, but we do have a physical one that you can fill out in paper here for those that are on site. But for our online people, if you can fill out the survey, we would appreciate it. It would give us an opportunity to find out what our members are needing as far as education. We are here to help. Again, if you have any questions, please feel free to ask those questions in the chat. We'll try to get your questions answered. And if you need any additional assistance for those that are participating on site, any of the colleagues that have either a name tag or one of our speakers will be able to assist you. Thank you again.